HIMS is an excellent company and HIMS holders have made a killing. Now, will they continue to do so? It's hard to say, but it is a high quality company. Now, I make this video not to bash HIMS, but I want to introduce you to the next HIMS. And a lot of you might click off right now because HIMS holders and holders of really any stock often watch videos just to reaffirm their biases. But for the folks who are not trying to do that, I want to introduce you to the next HIMS, which is very similar in a certain way. They're looking to do similar things, but in a certain way that HIMS to them would be the equivalent of any retailer to Shopify. So I want to introduce you to Hydrate if you guys aren't already familiar. Now, this article I'm going to be going through over just briefly is by an independent analyst, Byron Street Research. They are not too major, but this is the first independent analyst covering the stock, and it's very, very small. It's very early, so this is pretty significant for them. And I'll link this article for the people who want to read, but I'll go over the things in a more concise way, and I'll also add a tiny bit of supplementary information. But to give you the background, HIMS started as an Uber for nurses. What that means is just like a person could sign up to be an Uber driver and drive people around, a nurse could sign up and start providing services like an IV drip. Now, the main thing that's getting people really hyped is their evolution to Shopify for healthcare. And what that really means is that kind of like a retailer or perhaps a dropshipper can make a website on Shopify and try to resell stuff, someone that wants to sell drugs to people, say TRT, can actually figure out a way to do it through Hydrate's platform. And unlike Shopify, where they don't have a true moat, the moat that Hydrate has is regulatory. So if I wanted to go and sell TRT online and advertise it, I wouldn't be able to do it. But with Hydrate's platform, I actually would, which is pretty insane in some ways, but it's essentially solving a huge problem. And if you look around, there's actually many medium-sized brick-and-mortar businesses that simply can't sell online because it's just too much hassle to get through all these regulatory hoops. Or sometimes they're selling in a couple states but just can't sell in the rest. So this is really the problem that Hydrate's solving. And because of this, they have so much potential. So they've won some awards. This is nothing special. This was their first 2 verticals. It's proven so far that the management has taken the company up to a decent level of success. But essentially everything is about their Shopify like VSDH1, which is empowering companies and even individuals to sell direct to consumer. So when you're early, you often have to think about why you're early, why is there an opportunity, why is the market not pricing it in? And this is quite a nice list. But essentially, 1, there's no proof, and people love to see proof. Now, if you ask me, I'd say you better get in before the proof, because by the time the proof is out, the stock's already ran. You got to be forward-looking. I'm pretty sure everybody knows the market's forward-looking. Now, this being on the venture and a lesser-known stock has just, like, people don't know about things, so they don't invest in it. It's part of the reason why I think there's a discount. The thing that kind of sucks is they're majority owned by Victory Square. And now Victory Square is not like an offshore Chinese company or anything, but it is a company that has a pretty poor track record. And when people say that, and even when I say that, it's kind of unfair because with venture capital, you can have 90 duds and you have 1 winner and you make a killing. So, like, yes, it has a bad track record, but at the same time, like, this is like exactly what you'd expect. in venture capital. So Hydrate has released guidance. So far, every guidance they've released since they've been public that's hit the market, they've achieved. So there's no reason to doubt their current guidance other than their parent company, which has had quite a few duds. So that's up to you to think about how it might affect your investment. But for someone like myself, it would definitely reduce the size I'd put on. But I think you can't really base your investment too much off the parent, because it's like the equivalent of saying LeBron couldn't be trusted because he had no father. Like, he's the best basketball player in quite a while. So this is essentially that equivalent. Like, just because they don't have a good parent figure doesn't necessarily mean they can't succeed. Now, they've had their offering, which was on pretty bad terms. I won't get into it too much, but it did attract institutions, but probably not in a meaningful way, which is probably one reason why the stock hasn't ran too much. And like, everybody knows HIMS is very, very well known for their marketing. So that being said, everybody knows about HIMS, even if not from the stock. Whereas this company has built up so much with almost zero marketing. Now, the capital raise kind of screwed people up, and I mentioned that earlier with the institutions. So that just always kind of makes people feel uncomfortable. They could have done it in better ways, to be honest, but I mean, there's always reasons to deny a stock, and if you look into every little detail, you can find something bad for every company. And at the end of the day, only a few things matters. So there's a quick timeline, which I'll show here. But essentially, they start trading on various exchanges, and then they start their VSDH1. They launch it across all 50 states in the later part of 2024. They have a huge partnership with DripBar in all 50 states to launch DripBar Direct. And they partner with Dr. Frank's. And if you guys aren't too familiar with these, don't worry. I'll explain a little bit more later. But to get past all the unnecessary stuff and look at the numbers, full year 2024, we're looking at 16 million revenue. And barely a loss. If you look at something like HIMS, you look at a price to sales ratio, which is not my favorite metric by any means, but if you look at a price to sales ratio, you see that HIMS is at a more premium valuation. Arguably less potential. Yes, it's more profitable, but HIMS was also losing a ton of money in its infancy, and this is kind of where the company's at, and they've just really turned the corner. Now, this is good growth, it's proven, and this was just their first two verticals, not even the VSDH1. And unlike HIMS that had a ton of cash to splurge on all its marketing and grow, these guys did this with almost no marketing. So complete difference. Now they have cash to market. Now they have their crazy new vertical, and now they're already at that break-even-ish point. So there's a lot to look forward to, and you're paying a price to sales less than HIMS. And like I mentioned, not my favorite metric, because at the end of the day, earnings are what matters. And to an extent, with all the reinvestment, maybe you want to look at something like gross profit. But to look at something like 2025 year estimates, now this is this person's estimates, I have my own, but essentially, no matter how you look at it, unless you think this company is fraud, and a lot of points, essentially, it makes no sense to consider them fraud based on a lot of points, but no matter how you look at it, we're looking at explosive growth. This guy thinks we're trading at less than a 4 times 2025 PE. I think that makes a lot of sense. 2026, less than 1 times. I actually think that's conservative. but they have 30 businesses on their platform. Some of them are already doing 150,000 orders per month, and they just need the patients onboarded onto VSDH1. And that is like 1/6 the HIMS order run rate. And that's just like single businesses. And they have 30 of them on their platform. Look at something like the market cap, and you're looking at 80 million Canadian versus like 11 billion US dollars. So guys can probably see why there's so much more potential. Another thing I want to point out is they're on the venture, so not too many people know them, not too many institutions can get involved. They've already made it clear that they are one, eligible to uplist to the TSX, and that's easily verifiable. And two, that's one of their priorities, so it should be coming in the coming few months, I'd say. Now, some of the things that people probably don't know that they really should know is, I mentioned it a little bit before, but the problem Hydrate is solving is that people cannot advertise their products. They can't do the direct to consumer in all the states. Like they might be able to do it in one state, they can't do it in all. This just makes it easy and possible. 3 verticals: Uber for nurses, franchise solutions, and the main one, the VSDH1. That's something to really pay attention to. And you can look into the fees. It's not really that important, but essentially they have some commission, some they just do a markup, and they have some subscription fees. So it's very, very simple. But what really matters is the VSDH1, so everything else can really be ignored. And to talk about a couple of the parent company's failures, and to be honest, like they've had a couple companies get delisted. And when you hear that, that's obviously not great, but keep in mind they weren't in control fully. So it's just something that's going to happen, and especially with venture stocks, like this does look like their golden gem. It doesn't make sense for it to get delisted. It's older, it's seen more success. I think the TSX uplisting would essentially completely confirm that there should be no doubt. But for the guys who have doubts on their orders and what they can do, most of the businesses are private, but a publicly announced one is Drip Bar. So if you guys wanted to, you guys could literally go on Drip Bar's website right now and order something. So if you're thinking, well, this is a fraud, this business doesn't exist, that obviously can be proven false. If you're thinking, oh, they haven't signed any major businesses, that can obviously be proven false. Now, can they meet the orders? That is a question, but given recent updates, it makes sense that they can. And yeah, you'd have to essentially be thinking that they're telling complete fraud lies to think that they're overvalued at the current moment. Because with their very modest valuation, given their potential, you'd have to, they've mentioned goals, but it's not even the goals you'd have to deny. You'd have to assume things like the Drip Bar partnership are fake. You'd have to assume other things they've said about their 30 businesses being signed are fake. And they never said oh, this is a goal. They said they've done that. So you'd have to essentially think this is complete fraud, which wouldn't make too much sense. Because a lot of companies on the venture will overpromise, and they're going to tell you things like, oh, we're going to do it in the next quarter. And they always seem to be 1 or 2 quarters away. It's kind of like the equivalent of Elon Musk timing. Oh, we're going to have this by this time, and they just never meet it. If you don't think that Hydrate's like that based on the information, I think that's really the approach to take. But another one is the partnership with Dr. Frank, and you guys may be wondering who the hell is this? But essentially this is a guy who has a very popular and proven weight loss method in the UK. And essentially he just wants to get that into North America. So I don't think it's going to be very hard to do such a thing. He's had the partnership. He knows the playbook. He has the cash. And the population is significantly larger in America. If you extrapolate his success to North America, and there's a highly likelihood that he's even going to be more successful in America, you extrapolate that and you realize that they should easily be able to hit their targets. This is just one business. And I wish I could show you guys more. There's a couple that have been speculated to be theirs that are very large TRT players. But for the sake of them being unconfirmed, I won't bring it up. But another thing I want to mention, and this will be the last for the video, is really every time they've had a conference, the stock has went up because they're saying really bullish things and they're saying a lot of hype. Even if you don't believe in the vision of this, you can still make a killing off that. And I'll tell you, they have their Q1 earnings by the end of this month. There's a decent chance that guidance comes with that in a very meaningful way, because before they've stated a goal, but they haven't put it in the press releases. So doing that would be major. So that is a huge catalyst to look forward to. And then in the early of June, there's 2 major conferences that they're attending where they're not only going to be presenting their stuff, they're also going to be meeting one-on-one with institutions and high net worth individuals. And with this being pretty thinly traded, it doesn't take much for a pump. Now, if you do want to kind of backtrack through this, you can easily look through their conference dates, the news dates, and see how the price reacted. Like front running this before the last few conferences has reliably gave like 20% in one day. And on the better ones, you've actually been able to achieve like upwards of 80% in a couple weeks. So if you believe in this, I think this looks like a 10 bagger. The independent analyst is calling it a 4 bagger for his first price target. I think it's worth a medium-term hold and give it a chance to see how things are. If you guys don't believe in the vision at all, just traders, you guys can definitely front run these conferences and just make a quick buck off that. So regardless of how you see it, I think this is a great money-making opportunity. But yeah, that's all for this video.